and over again, I see ICT students make the same mistakes. You all overcomplicate everything. So in this video, I'm going to simplify your trading. I am teaching you how one 4-hour candle can retire you. Now, I've been hinting at teaching this for a while now, but today is finally the day. Enough of you asked for this, so I'm bringing it. One 4-hour candle is all you need. Let's dive straight into what I mean by this. You can see today, I am using an example from today. Inside of my private mentorship, we called this trade live, and I wanted to show you the perfect example of this. So of course, we are focused on one 4-hour candle. This 4-hour candle, it doesn't matter when it is, as long as it is either the 6 a.m. 4-hour candle or the 10 a.m. 4-hour candle. Okay, so the 6 a.m. one or the 10 a.m. one. As long as we have logical framework, it doesn't matter which one. One of them is due to expand. What is the framework here? If we head over to the daily chart, you can see we've obviously had bearish institutional order flow. And if we've had bearish institutional order flow, we remain bearish until a higher time frame level is taken out. The higher time frame level being these lows down here. This to me is the obvious draw on liquidity. This consolidation, because we had a consolidation, we rallied higher, retraced after dropping down, and now it looks like overall, if we drew this out, it would look like a consolidation, higher, retrace, expand, retrace, and then drop down towards the consolidation. If you ignore all of this time distortion, that is what we're doing. Consolidation, expansion, reversal, retracement, and now we're expanding towards where? Here. So if we zoom in here, remember, up close candles in a down move should hold price from going higher and should resist them to go lower. So we have an up close candle and we have a bearish candle which closes below the up close candle's low. That's key here. When we have that, we have an order block. When we trade back up into this candle, we are now looking at the 4-hour. Drop to the 4-hour. The logic here, remember, we need premium and discount as always. Swing high to swing low. This is your dealing range. Above 50% is a premium. Now, once we rally into this, into a premium area from here to here, and look what this 4-hour candle does. We take out the high of this candle inside of a fair value gap in a premium market. So we took out buy-side liquidity, intraday buy-side liquidity above this high. Now we look for a market maker model. So this is the secret to the 4-hour chart. Use it, mix with the higher time frame, use it to set up the intraday moves. So the 4-hour chart is the perfect blend between the higher time frame direction and setting you up for intraday moves. Intraday moves in a form of what? Market maker models. Okay, so once we take out this candle's high, you want to drop down time frame to the 5-minute. Okay, right here is this previous 4-hour candle high. We then rally above it and reject. This strong rejection is the start of the market maker model. Why do we need a strong rejection? Because we need to confirm that we are deep enough, one, in a premium, and that this stop run is enough. This displacement is the algorithm confirming that. Okay, so when we drop down, we break a swing low, displace with momentum, and create a fair value gap. This is the 2022 model, right? If I remove this so it looks cleaner, this is the 2022 model. Remember, 4-hour candle high, fair value gap inside of here. Okay, so this is your what? Those of you familiar with market maker models will be screaming it. This is your low risk sell here. When we drop down lower and come back up, taking out a swing high inside of the fair value gap, we also run into this. Okay, these two up close candles before the drop down, that is your order block. So this is your first level of redistribution. If I mark this up here, that's your first level of redistribution once we rally back up here. And because we've taken out a swing high, once we displace lower, this fair value gap is your second level of redistribution. Now, I have a quote about the second level of redistribution, and I promise you it holds true. The second level of redistribution in a sell model, after we've taken out a short-term high, like here, is like taking candy from a baby. It is that simple. Look at the strength and the momentum of this move down below the original consolidation, okay? And all based off taking a 4-hour candle's high. We're trading this 4-hour candle. We're trading the 4-hour candle's distribution phase, right? That's the key here. The 4-hour sets us up to expand. So we're trading that 4-hour candle's expansion. That's all we are looking for, okay? So original consolidation, where do we reverse from? Right there, okay? Now, I may or may not throw up an execution screenshot on your screen. I knew, as soon as we closed below here, I knew that once traded back up into, this is our second level of redistribution. I'll try throw a profit screenshot up for you guys, okay? I knew straight away this is the second level, and look at the momentum move down. All based off the 4-hour candle, okay? Let's dive into a few more examples of this. You can see now we are on the NASDAQ chart, okay? I want to point out this inverse fair value gap, which once traded through, I wanted to be used for distribution lower. So, obviously, with a tiny bit of framework, we head down to the 4-hour chart. One 4-hour candle. What are we looking for? Well, I just told you all, we wanted to see distribution lower from the inverse fair value gap. What is this? Up close candle, right? Which was created in a buy-side liquidity pool. So this is a key up close candle. I know once we trade up into this that we may see distribution lower. The algorithm notes key levels and uses these to offload positions, for institutions to offload positions, I should say. When we trade above here, right, this is a buy-side liquidity pool inside of a key level. As soon as this candle closes inside this candle and takes out the high as well, look, take out the high, close inside of the candle. I knew this was the start of a market maker sell model again. The original consolidation lies at these equal lows. Do you see the framework now? So we're trading this candle's distribution, okay? All from the framework of one 4-hour candle. Drop down to the 5-minute. Familiar, right? Look what we have. Remember, 4-hour candles high, taken out. What do we want to see as soon as it gets taken out? Rejection. The algorithm must start tipping its hand to you. And again, I will say it until it clicks. How do we know the algorithm's tipping its hand to you? Displacement. We displace down here, right? And we create an up close candle before dropping down once more. When we create an up close candle after we've had displacement and we've got the logic of 4-hour candle high taken out, equal lows down here, we're expecting a market maker sell model. When was it taken out as well? 9 o'clock New York time, a very key time. If it's taken out at a key time, this adds even more confluence. So when this up close candle is printed and closed below, any rally back up is a sell. We don't need to come all the way back up here because the algorithm has left a bookmark. Up close candles, when we're bearish, when they're left and closed below, these are bookmarks to the algorithm. The algorithm will refer back to these. It will find the page again and distribute positions from that same spot. That is what an order block is. So when you form this order block, we sell from there. Stop loss goes above the order block's high, target the equal lows. Simple 1 to 2.8, right? As long as you understand the logic of the 4-hour, dropping down into the 5-minute, this can retire you. And I mean that. I don't say that lightly, but it can retire you. As long as you exercise risk management and discipline, money management, proper money management, knowing when to stay out or when to get in, this can retire you. One 4-hour candle is all you need. This is why I say stop overcomplicating things, guys. Okay? You must understand we need to stop overcomplicating things. Let's head over onto another chart, right? So, GU. I was calling to the Discord. I wanted us to trade down into, this daily fair value gap because it's in a discount from this low to this high. I was anticipating us trading down here. This candle, this 4-hour candle is the key because again, we use the logic. Look what we're inside of. Fair value gap, 4-hour fair value gap. We are above buy side liquidity as well. So as soon as this candle closes inside this candle, look at the distribution. We're trading the distribution. What is the logic? Well, we're reaching down into this daily fair value gap. We're inside of a 4-hour fair value gap as well. We're above an old swing high at a key time, 1 a.m. New York session. Right before London session, I should say. Right before London session, we take out a key high, close inside this candle. Now we should distribute for London session. Look, the same framework. Once again, a market maker model. All of this is distribution to go lower. We drop down. Look at the momentum here. That again is the algorithm tipping its hand to you. As soon as we trade back up into this fair value gap, you're selling. You may be thinking, where does my stop loss go? Since the fair value gap is elongated, goes right above the candle that creates the fair value gap's high, right here. Target the daily fair value gap, 1 to 2.9. This trade in the distribution of a 4-hour candle is literally a 1 to 3 machine. This will provide so many 1 to 3s. It's unbelievable. Okay, it provides so many 1 to 3s. Go into your charts and study this. If you outline the logic and framework and then drop down, you will see so many 1 to 3s, I promise. Okay, what is also the logic here? Well, we have a high, a low, higher high, lower low. So when this is traded back into, guess what this becomes? An actual breaker. If I make this a bit easier on the eyes, this is an actual breaker block. Why? Because we have high, low, high, high, a massive run, not a massive, sorry, but a big run higher, not just these tiny breakers you see, okay? You'll see people draw breakers like so, and it's tiny price movements, okay, on like the 1 minute chart. We like to see these elongated breakers. So a lot of time distortion, make a low, make a high, time distortion, trades through. Look at the momentum we trade through the breaker with, and then bang, a touch back up into it, and look at what the algorithm does, sends it lower. That is not a coincidence, that is the algorithm. Breaker block lined up with a fair value gap. I don't like to call it a unicorn, but this is an actual unicorn. This is the unicorn model, right? A lot of you trade unicorns, but you trade it wrong. This is an actual breaker because of that framework, the time distortion. It's stretched out in time. It's not a short little breaker. It's a elongated move, okay? So when it breaks down and taps back up into it, we can be confident selling here because of the logic of the breaker and the displacement. Look at that drop. That is what I talk about when I say the algorithm is flashing. It is literally flashing itself to you, telling you I am reaching for this key level. Right now, this is the time I'm reaching for this key level. And if we take a step back away from all this intraday framework, where does it come from? The 4-hour candle. That's all it comes back to. That one 4-hour candle is literally all you need to retire yourself. You can milk prop firms using this. And I want to see some of you start to milk prop firms using this. Many of my students have passed accounts. Many of them have had payouts. I'm proud of them. But I want to see some of the YouTube guys pass accounts with this. So start using this model. 4-hour candle closure inside the previous one with some framework, with some logic. The logic may look different from time to time. In this case, it's buy stops ran into a key level. And then we close inside the candle for extra confirmation. We're then trading the distribution on these smaller time frames. Look how clean and obvious this is. You can trade this too, right? You can do this. So with that being said, I will leave the video here. I won't confuse you too much more. I don't want to put extra pressure on learning this. I know it can be hard enough to learn this as it is. But with that being said, I will leave you with that. Go into your own charts and study this. the 4-hour candle really can retire you. So that brings us to the end of the video. If you do want to become my student, check out the top link in my description. This is my mentorship. This is where I trade live daily and weekly. My weekly outlooks, my daily outlooks, what I'm looking at intra-week and intraday. Lots of my students have passed challenges recently, and we've really been taking the content to the next level. So now is the time to become my student. Click that link and join below. If you did enjoy the video, however, please do drop a like to support me and the content I make for you guys. Subscribe if you're new, turn on post notifications so you don't miss an upload. And with that being said, I thank you as always for watching. I'll catch you guys in the next one.